What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is April 29th of 2020. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, we have a lot of topics to discuss. We've not only got a lot of strength within cryptocurrency markets as Bitcoin, as well as altcoins charge upwards going in anticipation for the halving event, but along with that as well, we're going to be spending some time to take a look at precious metals markets as well as cannabis markets, and I want to give you all my up-to-date takes in regards to gold and silver as well as the cannabis sector. So we've got a lot of things to discuss right after our quick sponsor. Our sponsor for today's episode is Bitpanda Pro. Bitpanda Pro is the secure European exchange for crypto to fiat markets. Bitpanda has been offering secure, straightforward, and easy access to the cryptocurrency market in Europe for over 5 years and wants to offer the same service to more experienced traders, users using trading bots, and other advanced clients like cryptocurrency businesses and institutional investors. With the steady addition of more and more crypto to fiat trading pairs, Bitpanda Pro has made itself a convenient, secure, and trustworthy exchange to onboard or cash out easily. There's also a trading competition going on at the moment where you can win up to 15,000 euros in BEST or Bitpanda ecosystem tokens, so go and check that out as well down below in the description. Alrighty, everyone, so let's go ahead and dive straight into it. Let's go ahead and take a look across the board for cryptocurrency markets. As we can see, over the last 24 hours, the vast majority of cryptocurrencies here are in green territory with 2% or more in price action to the upside. And we can see that a lot of the leaders here, again, continuing to outpace into some double-digit territory for some of them. We got Unibright as well doing 18.5%. Ethereum up nearly 6% here. So a lot of good plays. XRP, again, one of the larger cryptocurrency cap plays, up 5.4%, and energy up 5% as well. So a lot of different cryptocurrencies making moves here. But most importantly right now, Bitcoin is obviously the player that people are watching here. And playing into the theory that we've kind of had here for the last couple of weeks, as many people were doubtful as we started to enter into kind of a short-term wedge here in Bitcoin's price, where we had lower highs and higher lows. In this case, we've gone through and continued the theory we've had for a while, which is that we would charge forward and continue moving higher towards $9,000 to $10,000 territory, right up against this line of resistance. Not exactly $10,000, but the upper $9,000 range. We've been talking about this for the past couple of weeks, and it looks like we've got that momentum coming in. Again, one key thing to note here, again, playing into what we've been talking about, this is not expected to be some major move that's going to sustain itself. You can see the volume relatively thin here. This is taking a look at Bitstamp. If you take a look at BLX, of course, we're not going to have the latest days worth of price action here. Volume's relatively thin, right? I'm not here to make an argument that this is going to be sustained very well. In fact, my theory of what's going to happen here over the next couple of days is that we're going to hit this line of resistance here going in anticipation of the halving event or very close to it, and then outside of that basically setting a lower high somewhere around here and then correcting back down somewhere to the $7,000 territory, setting a higher significant low from what we just set back here in March of 2020, and then starting to move higher outside and put pressure up against the tip of the wedge here, basically the line of resistance that's been holding down Bitcoin's price for a while, and then eventually breaking out and moving higher into the later part of 2020, into 2021, into 2022. Again, this is also why I have the very long-term price target compared to most people of 100K in the later part of 2022, really pressuring towards 2023. Okay, I'm sorry for saying 2020 something so many times, but it's just to give you guys some context in regards to where I see things going. So hopefully that makes sense. Hopefully that provides some value for you all. But again, we're getting very close to it, guys. Real excited to be here during the halving event with you all so we can go over it and watch it together. It's going to be a pretty historic moment. We don't get many of these very often, so I'm very excited to be here with you all. Now, another thing to discuss as well is what's happening in altcoin markets. We can see here as well, again, on the longer term chart here, building into a massive wedge. Again, signaling here that we're probably setting up for the next cycle. Again, we've been talking about it not only on the Bitcoin dominance chart, but also here on the reverse, which is basically altcoin dominance. We can see here that we have significant higher highs. It's basically, higher highs and also higher lows. And this is exactly what you want to see in a market that's preparing to make new highs. The price itself is signaling that bulls are buying in at higher premiums in price, and they're also taking the rallies further and further. Again, it's simply listening to price, not worrying too much about indicators, not worrying too much about your personal sentiment, just analyzing what price is saying. And when we started to correct back here in September, it became very clear to me that as we started to set higher levels here for altcoin dominance or lower levels for Bitcoin dominance, that the rally was most likely over as we had broken the key trend line that was holding this up. Okay, so again, a lot of different signals here, but again, as I've written here on the chart, my estimates for actual altcoin dominance increasing is basically expecting sometime in the later part of 2020, if anything, or most likely in mid to later part of 2021. I don't expect anything anytime soon that's significant. I think that's going to come in towards the peak of the cycle as we've seen in the past. Now, on individual altcoins, most of our plays are looking fine, having a little bit of a pullback for the most part on a lot of different plays. We can see here Chainlink testing a very key support range here compared to Bitcoin. In this case, it was previous resistance. Now we're going to have to see if we can make it support over the next few days and try to reach for new highs over the coming weeks. We also have as well basic attention token, still setting higher significant lows here. This is what I want to see. If we take a look here at Ren doing the exact same thing, looking very nice here on the daily. Raven coin, hoping that this will pick up some steam here soon. It broke a lot of its higher lows from the past. Kyber Network, one of the strongest plays here. I'm really hoping this can start to set up a low here and continue higher. We'll see what happens here. But again, I'm not, fading out of any positions right now. I'm still quite confident on Kyber Network and still holding my position on it. So we'll see what happens. Anyways, now that we've dived in through altcoins a bit and cryptocurrency markets with Bitcoin, again, our target is for Bitcoin to go up towards the upper $9,000 range and for altcoins to remain relatively stagnant for the next 3 or 4 months outside of some of our plays where I think we'll still continue to outpace the market. I want to go ahead and talk about what's going on in gold markets. So gold is probably one of the strongest plays here alongside Bitcoin in this case in the sense of its performance since the crazy dollar liquidity crisis that we had back during early March when everything was selling off. It didn't matter if you were holding risky assets like stocks or properties, other types of assets. Basically, unless you were in treasuries or government bonds of some sort, you were probably losing out and you were losing value. And even in gold, as well as silver, we had a massive sell-off here where, for example, gold went from $1,600 or $1,690 down to $1,456. So very big sell-off here in the sense of precious metal markets. And we can see here that we've rebounded quite strongly as people have started to look for hedges as central bank monetary policy has gone off the rockers over the last couple of weeks. We've had, for example, QE4 that has been the largest quantitative easing program in history, outpacing all 3 previous quantitative easing programs. And we're not even through the thick of it yet. We still have a few other $1 trillion of operations to go through, expecting the Federal Reserve balance sheet to go up to $9 trillion, if you can believe it. And that's just the Fed. We're not talking about the Bank of Japan, which has also mentioned the term unlimited liquidity. They've started a new bond buying program. We have the ECB that's already at 0% interest rates, alongside Japan, which is at negative territory. And they've also looked at reinstating QD in some shape or form, and they've already increased their balance sheet. And then there's the People's Bank of China, the Bank of England, you name it. There's a lot of central banks here, Canadian Central Bank, a lot of people that are going to start following the Fed's footsteps. So again, mass amounts of liquidity, mass amounts of currency in the system now, really debasing the base currency supply. So in this case, it makes sense that now as central banks have reacted, you're going to get basically this V-shaped recovery, as we've been talking about a lot, and people have been talking about a lot in equities. You got the V-shaped recovery here in commodities. Again, the hedges are showcasing their work in their price action. It's very beautiful. So again, very important stuff to take into mind here. And I think that we're going to see a continuation in gold throughout the year. But two things that I want to talk about. This is going to call for a lot of demand here. Now, this is a really interesting chart that Isabel Net put together. They actually came from Bloomberg and Bank of America Global Research, where they estimated some forecasts for price, but they also plotted it on a Y chart in this case that showcases the amount of tons required in order to get us to that price, the amount of demand that we're going to need. And this is going into the range anywhere from our forecast of 1,700 to 2,350, in this case going from around 3,000 tons upwards to 4,000 tons. So again, massive amounts. Now bear in mind, when you're looking at this price, you're looking at an ounce of gold. So we're going to need, if I remember correctly, I think it's about 141 million, a little bit over 141 million ounces of gold to be purchased in order to get us to that valuation range. So very interesting stuff here to take into mind in regards to this chart. I think it's a really good kind of model here to showcase that really, even though it's a lot, it's not unattainable. We could easily get there, I think, over the next couple of years. The second thing I want to talk about here is silver. Now, silver has also had a really great recovery from its pretty stark lows here after the crazy sell-off we had, going from around 1880 down to 1180 or 1170. We've not only recovered quite nicely here, but the major chart that I think any of you should be looking at right now, as I always recommend, ratios are so important. And the gold to silver ratio is more relevant now than it ever has been. Okay, so let me explain why. A lot of people right now are completely shocked at how silver has performed, and I completely agree. I think all of us have been thrown back a little bit, including myself, as to how far silver dropped during the liquidity crisis we had back in March, when people were searching for dollars. They were selling every single asset. They were covering their positions. So why is it that we're repeating history now? Why am I saying that? Well, because take a look back here at July of 2008. When we were at the peak of fear during the financial crisis. People rushed to gold before silver. We had the exact same kind of vertical rally. If you take a look here at the weekly, I'll even zoom in a little bit so it's a little bit clearer, right? Multi-week rally of gold outpacing silver. And then afterwards, we kick off the cycle where silver starts to lead in the commodity run-up, right? So very important to take a look at here. This is back in 2008 down to 2011 where the markets peaked. Take a look at what happened now. Multi-week rally to new highs on the gold to silver ratio, and now a stark decline of about a dozen points, a little more than a dozen points. So at this point, knowing what happened here in history, are you more bullish on gold or are you more bullish on silver? It's just simply a question to ask you guys. Again, what I can take from this chart, just in my personal opinion, it's not financial advice, what I see here is the opportunity for silver to start really gaining some grounds here. So if I'm looking at commodity positions, and I certainly am, it's going to be where I'm going to be adding my portfolio next, as I'm kind of steering clear a little bit from equities. No doubt, I'm looking at cannabis markets. I'm looking at a few other sectors that actually look like they've got a decent amount of value with the amount of correction they've had. At the end of the day, though, this is what I'm looking at right here. So, again, I think there's a good chance here that silver could really start to regain some of its price action that it had for the last couple of months. So keep an eye on that. Just a key thing I want to talk about. All right. So taking a look here at cannabis markets. You guys know that I've followed this industry for a very long time. You all know that I've also been very cynical about not rushing into getting into cannabis markets because every single what appears to be a recovery or rally would be instantly sold off in a matter of a week to a couple of weeks, and we'd be going down to new lows across the board throughout the major ETFs and indices in the cannabis sector. We can see we've had a very long-term correction in the general sector here. We're taking a look at the MJ ETF here, which is the kind of broader ETF for cannabis markets that you can trade throughout the US. It's a good benchmark here, in my opinion. But we can see here that unlike every other kind of bounce and fade here where we had a rally and then sold off very quickly, we did something very different this time. In an environment of peak fear in equity markets throughout March, something very interesting happened, and that was that we had a significant rally, probably more significant than most of the rallies we've had for the cannabis market in recovering price. And we had a significant higher low that was held and maintained as prices set up to new highs. We're using no indicators here. We're not overcomplicating things. We're not talking with bias. We're looking at price. And take a look at the weekly here. Again, these longer term time frames are going to help you all make these decisions much easier. Look at this chart here. What's different this time around than the past year and a half? Or actually, I'd say probably, to be fair, actually it was about a year here because it was back in March, but a year and a month here, right? Give or take. What's different about this? It's that you've got consistent higher lows on a weekly basis. A significant new bottom here at a higher level, pressurizing towards the previous relative highs. That's what we're looking for. This is what every trader should be excited about, whether you're a day trader, whether you're a swing trader. If you're generally looking to go long, you want to see higher lows, right? Again, I can't recommend you guys to buy anything, right? if you guys want to go ahead and trade cannabis stocks, if you still want to be bearish on it, doesn't matter. It's not my job to tell you guys what to do in that case. You have to make those decisions for yourself. For me personally, though, this is what I like to see on price. And I'm definitely keeping an eye on cannabis stocks at the moment for some swing trade positions in this case. And, keeping it in there for a multitude of months in this case, because I think if this can sustain itself, what I'm looking for in a trade is this going back up to 24, like testing some of these previous support levels and possibly maybe hitting resistance around that range and trying to see if it can go higher. Because if the Fed keeps printing, guys, don't bet against equities, right? Just please don't, guys. Don't try to buy excessive amounts. I mean, if you want to buy like a reasonable amount of puts or something, right, to hedge yourself, that's how you use options and things like that. But to buy triple leverage shorts, to try to bet against infinite liquidity, it's a losing game. We saw that for the last 10 years, right? And I've talked about that here on the channel. One of the things that was one of the winning aspects for me when it came to equities was that I didn't bet against the S&P 500 during a period where the Fed was doing quantitative easing programs. It made it very clear that they were going to do anything to sustain markets higher until the moment when they started to pull back the lever. They started quantitative tightening. That's when I went bearish. And it was good that I went bearish during that time, because during that time period, if you take a look back to really where we are now, equities haven't gained that much, even after their rally back upwards. So, again, we're keeping in mind here what the Fed is doing. That's the key thing to watch. And if you're keeping in tune with what the Fed's doing, and you're also keeping in tune with what price is telling you, you'll be further ahead than the vast majority of people in the world, whether you're day trading, swing trading, or long-term investing. All right? So anyways, guys, last thing I want to talk about, just on a positive note here, in regards to global cases here for the virus that we're currently living through. I know this is still probably the main topic of discussion. It's impacted our lives in one way or another. I just want to say it's really good to see here that it appears on the global stage we're starting to flatten the curve. Really exciting stuff, guys. I know we've talked a lot about this over the last couple of months. We were pretty early to talk about it back in early February. And I think maybe even possibly towards the later part of January by chance, as it was developing in China. But I don't want to claim that. I don't know. I'd have to go back. The major thing, though, to talk about here, guys, is it seems like we're finally starting to have some progress. Economies are starting to open up across the world. It's going to be interesting to see what happens. And I hope more than anything that you all stay safe. And again, continue to follow good practices in this case. That's all I ask, because I just want to make sure you guys are safe. At the end of the day, I care about you guys and the community. And I also do care about myself and stuff. I'm going to try to take proper precautions as well. But all in all, just want to celebrate this moment where it seems like we're starting to flatten the curve here. Things are getting better. And we'll see if that can maintain over the next couple of months. I know there's the theory of a second cycle as well coming into the fall and winter of 2020. So again, we'll see if that happens. But above all, seems like for now, the battle is starting to be won. So that's really good to see. Anyways, guys, hope you all are having a fantastic day wherever you are. Thank you all for sticking around, and I'll see you all in the next video. Stay tuned.